Good morning, one and all, and welcome to this morning's video. I hope you had a pleasant and productive weekend. So I have just the two pairs on watch today, and those are dollar yen and euro kiwi. So I would think that the favorite of the bunch for me is dollar yen. So why am I looking at dollar yen? I am looking at dollar yen because on the weekly chart, I'm just going to start on the weekly, we have, it's not the greatest sequence overall, but we have broken above this high here, and we've after this this kind of consolidator, I can't even say the word consolidatory. I can't even, you know what I mean, corrective price action. Okay, we've dropped out of all of that, and we've completely capitulated to the downside. And the thing that I'm most interested in is the fact that we have retraced. In terms of this move from here to here, we have now retraced about 75 to 80% of that move. Okay, so the chances of this finding its way all the way down to here, regardless of what it does afterwards, whether it taps into that area and then moves up, which could happen to give us that kind of structure, that 1, 2, 3, or whether it breaks below, consolidates, and then drops back down to here to give us more of this structure to perhaps tap into that, is irrelevant. The chances of us moving down to here, because of how much of this leg we've now retraced, is very, very high, particularly after this last week's weekly close. Okay, very, very bearish. So therefore I drilled down, and you can see what may be the start of a morning star formation. This is the important bit. If this is a morning star formation, what's it responding off of to move it to the upside? It's not responding from anything to the left. So that is just giving me a clue that this is, we have this structure here, we drop out, we have this channel here, we then go into this, we drop out, and then I'm just getting the impression now from what price action is telling me that this is an impulse correction continuation to push lower to take us down to that low that I was speaking about. Okay, so now I'm analyzing the lower time frames. So what can we see here? We can see that we're gravitating towards an area of significance on the 4-hour chart. Okay, if we just zoom in a little bit more, we can also see one or two other things. Okay, so we had this long sideways price action here. So seeing as I've got a little bit more time to break this down, I can do it on the fly. We had all of this. Okay, price breaks out of that. We leave a bit of a footprint there. We tap into that by way of a 1, 2, 3. We have the middle section there. Okay, we then break out of all of that. We narrowly miss that area, but we break below all of that. Okay, we have the little consolidation there. We retest the back end of that. Price moves down, leaves a bit of a footprint. We wick above there, likely stop out all the orders. Price comes down. There's your new footprint, and that is likely where, given that this is one structure in itself, this is one piece of its own, this is likely where the liquidity is now sat based on the separations of structures which I've just done. Okay, so we're going to remove all that from the charts. Okay, so what I'm looking for in this instance is I'm looking for, in accordance with my forecast, is I'm looking for a break above this area of value, specifically a break above, and I shall explain why. Because I'm just looking at where, see this little consolidation here, right? If this was further down, so if we just take the bars pattern tool here, I don't know why it always does it like that, but let's get that back. So if this, I don't know why it always does it in white when I have it in green. If this consolidation was further down, say sort of more in the middle of this range, then I would be looking for a tap into this area and push back down on a flag, right? But when the consolidation is more closer to the top, it's usually the case that this consolidation will cause price to break out a little bit higher before it breaks back in. And one of the things that reasons I say that is because it's not typical, if you've got a consolidation which is closer to the top than it is the bottom, that you just, I mentioned this recently, it's not usually the case that you just tap it like that and then get a little consolidation like that and go. It just, I haven't seen that very much in my trading documentation, so I'm specifically waiting for a break above, basically for this 1, 2, 3 move, this 1, 2, 3 to basically finish its move, okay, which would finish around this sort of area. Then I'm looking for the break back in. We do have to remember that one of the reasons this might be a little bit higher up, this consolidation, is because we might also be tapping into, why it keeps doing that, tapping into some of this consolidation again, okay? Maybe we wick up to that area, break back in. Either or, regardless, what I'm looking for is I'm looking for a break above, a break back in. And because we have these little consolidations sat above, that's when I don't actually look for 5-minute flags. And people might wonder what that is. I know someone asked me a similar sort of question recently on YouTube. A 5-minute flag is just 6 to 8 corrective 5-minute candles. Okay, that's not what I'm looking for. I'm looking for a minimum of if we break back in, a 15-minute continuation just because of these little consolidations sat just above, and that would be 6 to 8 corrective 15-minute candles, and then I'll look to get short on the break or within it, depending on how it forms. I've got my entry requirements here. If it's a structured 15-minute chart, 15-minute flag, which means I can see the structure on the 15-minute chart, that entitles me to look to get short on the break and within the structure with a 15-minute risk entry from the top of the structure. Okay, if it's a non-structured 15-minute correction, so 6 to 8 corrective 15-minute candles, but I can't see the structure unless I drop down to the 5-minute, and that would allow me to get short on the break as well, but only allow me to get short within the structure on the 5-minute chart if the structure is visible on the 5-minute chart but not the 15. Okay, that might be difficult for some of you to understand, but I know what I mean. I haven't done this for long enough. But anyway, that is what I'll be looking for. And because the overall sequence has not been great, I'm just looking for a quick in and out down to there for about 6%. Okay, we do have to zoom out. And the sequence, as I said, has not been great. So I'm just looking for a quick in and out move down to that area. And what I would do is I would target from range to range and be looking to target 90% of that range, which would give me about 5.6. It's not about getting the biggest profit. It's just about stacking the wins and then moving on to the next position. So that is dollar yen. Let's move on to euro kiwi. So this is a slight little, I guess you'd call it a counter trend move. But if we just look at this on the higher time frames, so on the higher time frames, we have retraced. We do have the gap down there to be aware of. But in terms of this move, we've now retraced 85, 90% of that almost. So that gives me an impression that we're gravitating back towards this high and that this is an impulse correction continuation to push higher. Okay, I am mindful of the fact, and this is definitely partly why this is lower down on the list. This is one of the best weekly closes you'll ever see for a move to the downside. So last week's weekly close. Okay, we opened here. Okay, price washed out potentially a lot of liquidity by way of that wick and then closed down here. Okay, that's just the mechanics of what this candle actually means, as many of you will know. So this could be a move to push lower. If it was a move to push lower, specifically because of that candle, and because we have technically, if we just zoom in, I'm sure there was a little so if you look at this, if you really analyze this, we have this piece of structure here. Then we have this little footprint that was left there. We near missed to it, near missed to it, and near missed to it again. Then we broke above the little footprint. Why is that? Why is this footprint significant? Because where this footprint is after this consolidation, there was a dropout which caused price to smash through all of this structure. So there must be a lot of liquidity, and the gaps, the near misses to it, are the clue. We wick above, stop out the liquidity, and then we move to the downside. So potentially this could be a move to the downside because of that and because of that weekly close, okay? But what I would be looking for is I'd be looking for a consolidation below, or I'd be looking for a consolidation below in this instance to confirm that we're not pushing to the upside, and that doesn't seem to be, that would take a little bit longer to form. What I would actually be looking for, I'd be looking for something with a bit more development. What I'm looking for today, do I expect this to happen? I'm not expecting it to happen based on what price is doing at the minute. But what I'm looking for specifically, because if this is a move to the upside, you have to remember that this low is visible on the weekly chart, so it's significant. Okay, because it's a significant higher time frame low, we would usually break below significantly if we're going to move to the upside. Okay, and this, in my experience, is not a significant break. So what I'll be looking for is I will be looking for a break below, specifically a break below, and then a break back in, followed by a 15-minute continuation, not a 5 again, because technically we still haven't had any higher time frame confirmation closes. Okay, we haven't had a daily close to support this idea yet, so I'm waiting for a little bit more deliberacy by way of a 15-minute flag rather than a 5 for that reason. Okay, and then I would look to get long on the break or within it. Okay, but the way this is starting to form already, it's already starting to, if you just look at this, so if we just analyze this, okay, what has price done? So we tapped into that little footprint, and the reason I'm not looking to get short is specifically because what I would be looking for me to be able to get short would not be ready by the end of the day. Okay, so we tapped into that, but we near missed multiple times. We then have an expansion of price. We tap into that. If you look at what price has done subsequently, we tapped into that by way of this kind of V shape. We broke below, price left the footprint. We tapped the footprint. We broke below again. We left another little footprint. We tapped into that. So it is kind of moving in sequence for a move to the downside. So that is one of the reasons why the fact that it's doing that might support that bearish weekly close that we had. And this likely won't shape up. But I've just got it on watch just as a bit of a hedge. But as I say, price is responding very well to structure for a move to the downside. So for that reason, and because of that weekly close, I wouldn't be surprised if we do. Wouldn't surprise me if we do break below and we don't retrace because of all the things I've just said, and then we start consolidating afterwards. And if we get something a bit more developed like that, then I would definitely get short and be looking to target some of these more significant lows down here and down there. Okay, but that is my forecast today, folks. I hope you've enjoyed it, and I shall speak to you again in the next video. Thanks for watching.